Okay, hello to you all. Thank you for joining. So as Giles said, there's three of us going to talk to you today. So Andy and I will do the bulk of the story, and it is a story, we think, and then Mark will talk to us at the end. So we're going to focus on the business change and what it meant to the business, but it was supported and enabled by technology. That technology is OneStream. So Mark will give a very quick overview of exactly what that is for a couple of minutes right at the end. Again, as Giles said, we can't answer questions as we're going along, but if you put them in the chat, we'll definitely have time at the end. I think we've got about an hour allocated, but we definitely won't take that long. If you're anything like me, the diary's pretty full, and at the beginning of this sort of change in the world, Zoom and Teams are awesome, but kind of now by the end, any meeting that ends early is a good meeting. So the main content we're going to go through will take about half an hour. And then, as I said, there'll be time for a bit of a Q&A at the end, and then we'll definitely finish early. So in terms of introductions, so my name is Ash. My background is a mix of consulting and industry. So I spent a number of years in group finance, looking after consolidation reporting, budgeting, planning and forecast, both the systems and the process. And then I moved into consulting about 15 years ago. And there I focused on implementing technology and doing that as part of technology-enabled finance transformations. Andy? Andy, you're on mute.
Hi, everyone. Sorry, could you hear me now?
We can now, Andy.
Oh, great. Thank you. Okay, so yeah, sorry, just to introduce myself. So I've been working with Hyperion as a business change consultant now for over 4 years. My background is in finance systems and change within financial services, and I'm an ACCA accountant.
So as the lines between work and home have become very, very blurred recently, we thought we'd show the other side of us as well. So whilst I'll sit here doing this presentation, I can hear the children running around in the background. So I have 3 of them. I like throwing them up in the air in the pool, and I must confess to needing a glass of wine every now and again to get me through bath and bedtime. Andy, his origins come from Wales, and he does a really good dinosaur impression, which, judging by the photo, has come in handy at least once in his life. And on that note, I'm going to hand over to Andy to take us through the story.
Yeah, so we've just had our 25th anniversary of the company, and that within that 25 years, that's grown from nothing to $700 million revenue turnover, 5,000 employees across 40 countries. So a large part of that growth has been organic growth. So what we've done is we've managed to retain the original entrepreneurial drive that founded the company. We've managed to retain that over that 25 years, and that's really driven our growth. And that sort of leads into some of the issues and challenges we've had sort of arise from that fast growth and the acquisitional nature of the company. Okay, so just to give you sort of take you back to the 25 years to where the company's come from, because that's really our DNA. So to understand the company and some of the challenges we have today, we have to go back to when David Howden first founded the company. There's a joke he likes to tell about himself, and he says in the 1980s, if you were privately educated but left school with no O-levels, you had 2 choices in life. It was the army or insurance, and he failed the medical for the army. So off he went into insurance, into the stuffy institutional 1980s world of the London insurance market. And at that time, the insurance market was going through a big time of consolidation. The big American insurance companies were buying up the independent UK insurers. So very stuffy, very institutional. The clients were expected to come to you. You know, you weren't necessarily supposed to go out and win business, especially overseas. So what David Howden did was he set out to create a company which was fiercely independent and fiercely entrepreneurial against that. Okay, and the first place in the world he went to to do that was Peru. So you can imagine he was himself sort of working through hotel to hotel, working through the Andes, working through the dusty, baking hot plains of Peru, building a business from nothing out of his briefcase. Okay, so that's really where we've come from as a company, and where we are today is, you know, connecting those parts of the world that weren't connected, connecting them in with the London insurance market. And we've used that same model across 40 different countries to build this international company, and also build a big team of specialist brokers in the UK. Okay, and that's where we are today. So let me just talk a little bit about the industry that we're in. The industry splits into roughly into retail and specialty insurance. So retail insurance is probably the one most people are more familiar with. So this is the high volume, low margin, you know, life insurance, small business insurance, that type of thing. And this is retail insurance is an industry on the brink of massive technological change. Okay, so you may have heard of insurtech, micro insurance, two big trends going on at the moment. So a huge investment in technology in retail insurance. And what that's really about is the traditional model of insurance. You have an annual touch point with your customer. In the case of, say, a car insurance, or in the case of life insurance, you know, you may only have a touch point once every 20 years. Okay, so it's about using technology to gather more data on customers and create shorter term, more tailored packages. And that's enabled through technology. So as a company, Hyperion have started our own insurtech company called Hyperion X, which we're very excited about. That's retail insurance. Okay. The other side, which we specialize in, is specialty insurance. Okay. So this is the higher margin insurance, and this is really about building small specialist teams which are embedded in certain industries. So we have experts in cybersecurity, in sports insurance, you know, David Beckham's left foot. We have clinical trials insurance, we have oil rigs, you know, and the list goes on. So many of these small specialist teams who are working between the clients and the Lloyd's underwriters to build very tailored, highly specialized policies. So we're a broker. So broking is essentially quite a simple business. So you have broker. We take a broking commission. We don't hold the risk directly on our own balance sheet. We have costs. So we have high caliber staff based in some of those specialist industries. So we have staff costs. We have travel and entertaining, and we have IT costs. Okay, but essentially quite a simple business. So that's where we are as a company. This is where we are today. So just to describe the entrepreneurial nature of the company that we have today. So overseas, predominantly it's still founder-led businesses that have been acquired in the group. In the UK, we have these specialist teams running independent with a high degree of autonomy within the group and incentivized on their own P&L. Okay, so we've managed to give them a high degree of autonomy, high growth, quite a light touch corporate functions. So from an IT and a finance perspective, we don't have those big overarching corporate functions. And where we do have those, they're really around servicing the needs of the business. Okay, so this is where we are as we mature as a company. These are the issues we're grappling with. How do we retain that flexibility and that high growth while at the same time maturing and building out some governance around that? So that's really the fundamental challenge we got, so flexibility and governance. Ash.
So this is the bit where I entered the story and started to work with Andy and with Hyperion Insurance. So you've got all the background that Andy described. So growing very, very quickly, very federated, spread across lots of countries, and they've got, you know, a need to create something that supports all of those business in terms of fueling that growth, which is all of the reporting and the data that they need. But at the same time, kind of pushing down controls and governance without sort of killing the entrepreneurial spirit. So when you start to look at the organization, you've got sort of a tiered view where your needs in the country are different to those in the region, are different to those at a divisional level, are different again at group. And then you've got Hyperion X, this new thing kind of emerging along the side. You've got a real variety of stuff mixed into the business in terms of technology, different levels of sophistication, from the highly sophisticated and organised, your shared service centre-led finance functions in the UK versus sort of very, very small working teams outside, spread geographically in different time zones and different languages. In terms of priorities, you end up with loads of them, and they all almost seemed equally important. So whether it's internal reporting or external reporting, the analytics they needed to do, the controls they wanted to push down into the organisation, a need to standardise, a need to simplify, a desire to integrate to data, to automate, to create those controls, that they all ended up being sort of equally important depending on the level of the organisation you looked at. And then this desire and need to be able to attest to the controls, the financial controls embedded in the business from the ground up. So the CFOs in the countries and the regions, the divisions in the group, attesting to those controls is really, really challenging without kind of standard processes and kind of technology to support it. So really what it was about is how you can see that there's a lot to do, but how and where do you start? So Hyperion Insurance, they had a need to change, they wanted to change, and they had the vision. And that was what they wanted to create, was just to kick it off as a rally point for that change, something for everyone to gather behind so they could start to get them moving in the same directions. They started by setting out this sort of compelling vision and then creating buy-in at all of the levels of the organization, from the top into the divisions, into the regions, and down into the countries. Because only by doing that and creating the right level of sponsorship, getting people behind this common cause, could they bring all of the components together of the organization to be able to then move them through the change that was needed. So that was the real trick to it. Again, if you remember the beginning of the story, where it came from, the nature of the business being federated and spread, and this sort of mix of sizes of businesses, you've got to get them all moving at the same time, and a common purpose. And the only way to really do that was to sort of buy them into a vision and then give them all something to get out of the project. So whilst a lot of the challenge of that nature is really about people and data, to give them both the controls and the richness of the analysis. So it's largely people and data challenges. You can't solve those problems without it being enabled by technology. That technology was OneStream. Mark will come on to that at the end. We'll talk a bit about the solution before we get to that point. So it's about finding the best technology that could create that platform on which we could build the solutions to support the people. And then it was about putting it into a plan, phasing it in the right way, balancing the right level of acceleration with risk, and then being able to stick to it. So these days we expect change, especially technology change. We want it quicker and faster than ever. We don't want to wait a long time around for it. Hyperion Insurance as a group, it's changing really quickly. Its priorities are shifting. So if you decide to do something, their ethos and their principle, the way that they do it, is to very much go onto it and then start and conclude it quite quickly. So we'll talk through the timeline later, but it was really about creating that journey plan and making sure there was kind of incremental deliverables along the way. And then it was about underpinning all of that with a strong set of guiding principles that would help us be able to kind of manage the scope, manage the priorities. So what we're trying to do is replace the current platforms with OneStream, use that to create the controls environment, and then push that down top to bottom, and then have a pot of data that was rich enough for all the analytics to allow them to sort of fuel the growth of the organization.
Yeah, so let me just describe where we were at the beginning of the journey. We were, as I said before, we were very much led by the business, the changing needs of the business, very responsive. We have big FP&A teams servicing those needs. So lots of granular reporting, lots of different pots of data, and very P&L focused. So where we've been, the journey we've been on over the last few years is, maturing that and trying to bring some governance and control over it. So, we're talking about consistency between the consolidated and external lender reporting we do, bringing the consistency between that and the management data that's being reported. We're talking about, after data's been reported, not letting it shift around underneath you, So creating a really well-controlled close process. Okay, more focus on balance sheet and cash. The cash is really key for us as a growing acquisitional company. So those are the sort of things we're trying to do. But how do you achieve that? How do you achieve both that flexibility and the controls? You know, is it even possible? You know, and I wasn't sure about that at the beginning of this journey. Is it even, are those two a trade-off? Is it possible to get both? So what we've discovered it is possible to get both. And the key to this is creating a single finance cube of data. Okay, now this sounds a bit technical, but this is actually really fundamental. So a single finance cube of data, but which contains all of the dimensionality you need within it. Okay, so you've got one pot of data, but you've got different people looking into that same pot of data with a different lens. Okay, so from a group reporting perspective, you're looking at an entity level, legal entity level. You're looking at IFRS level. You're looking at year to date. If you're a management accountant, if you're an FP&A team, you're looking at reporting unit. You're looking at that data at management level rather than IFRS level. Periodic view of that data, but fundamentally the same pot of data. Okay, so I mean, how do you? So we talked about the needs there of group finance. We talked about the FP&A reporting. What about Colombia? Okay, so I'm using Colombia as an example of one of our local subsidiaries. Okay, that maybe in the past we've seen as not being particularly material to group. How do we get Colombia to gain local benefit from this system and to invest in this themselves? Okay, that was the key for us, because I think previously, you know, these type of group reporting systems can be seen as not something that necessarily is useful or taken ownership of at the local level. And really the key here is to, again, using that single cube of data to extend out the dimensionality to a level that's useful for the local subsidiaries. Okay, so previously we may have treated Colombia as one reporting unit, because you know that's a level that's material to group. But actually, if you want to make that useful for their local management reporting, you need to build in all of the reporting units and the business lines, etc., so they can do their local analysis off that same data. Similarly with the chart of accounts, we're needing to extend the chart of accounts down to a local level, so it's useful for their own regulatory reporting. Okay, so we get more investment in the system, we get more control over that data, because we know that, you know, there's consistency between what's being reported locally and what's being reported in the centre. So likewise with budget data, the budget data has been modelled at a lower level of granularity generally. We're talking about sort of people, loans, capital items. You know, we're modelling down at that lower level, but can we do that in the same cube of data as we're reporting our actuals, our monthly reporting process? Previously, these were things that we did in other systems or other models, and then tried to integrate or tried to reconcile, you know, and that was part of the problem for us. So we're finding that if you've got something which is flexible enough, you can extend down to that lower level, you can get that consistency between actuals and budgets as well. So for us, cash flow is really important. You know, particularly cash flows from the subsidiaries to the centre. Okay, so that's funding acquisitions. So we need to be able to track that. So things like dividends, intercompany loans, allocations, we need to be able to track that at intercompany level. So again, you need the flexibility in there in your dimensionality to be able to track things at intercompany level and to model at that level. Okay, so that's really key for us. One other area I'll just mention here as part of that sort of central cube of data, something which is really essential for us, is organic growth. So this is a key metric for us, something that our investors look at very closely. So to get by organic growth, I mean, what's the underlying growth of the business, stripping out FX and stripping out acquisitions. Okay, and again, here you need to extend out here to get your year-on-year growth at a constant rate, a constant exchange rate. You need to extend down into the transactional currency level. Okay, so then you can look year on year at the underlying revenue increase, stripping out all of the FX from that. We've also introduced a change dimension. So we're segmenting our business by discontinued, BAU, acquisitions, and then also, you know, acquisitions by year as well. So we're able to segment, almost like layers in a cake. You're able to segment the business, you know, with these different dimensions. Okay, so everyone's getting what they need out of it from a different perspective, and that's been really, really key. So just to recap on that, single finance cube of data has been the key for us.
So that's definitely a point that's worth highlighting. And I mean, I've been doing these type of projects for a long time now. And in the old days when we did them, it was all about reducing the data set you were trying to put into the applications to get it down as small and tight as possible, thereby increasing performance, kind of get rid of everything you could and really consolidate it into a small sort of data set. But now it's the opposite, actually, and especially to service the needs of an organisation like Hyperion, it is actually about getting it down to the transaction, getting it down to a low level of detail so that you could give something to all of the different users inside the business. You know, some value out of the application. By doing that, they start to use it as their system, and that's what allows you to have the controls, start to do those balance sheet reconciliations, get the attestations signed off and into the system, and that's what kind of rolls up from the bottom all the way to the top in the external reporting. In terms of timeline, just put it in some kind of context. So it's about an 18-month journey from end to end. Obviously, well, it's still ongoing, but it will be about 18 months across the 4 phases you see below. Kicked off in from a design point of view from January 2019, and then the first phase was to deliver that core model. So Andy made this point, if I reiterate it. So it's about getting that first model correct, the data model support, the consolidation to support the management reporting, you know, down to a very granular level, all the way up to what's needed at the group. On that core, that's where you put the bulk of the time and the effort, and then all of the change after that point is more incremental in nature. So that's why you'll see a lot more time elapsed between the beginning of the project and the delivery of phase 1 than you can see in terms of gaps between phase 1, 2, 3, and then 4. So once you've got that core model out there, that's the biggest change for the users. After that, because it's the same platform, it's the same technology backbone, it's the same application that you're using, all you're doing is kind of releasing additional capabilities. So for us, that was then using workflow, so task manager, which was for the shared services part of their business. Eventually it'll be extended across the organization, but it was focused on specific chunks first. That was the end-to-end close process, so including ledgers, and then the budgeting, planning and forecasting. The final phase in the current kind of program of work is the balance sheet reconciliations, the attestations. So if I go back to what these projects used to feel like in the past, they were generally a lot longer. I mean, 18 months is still quite a lot of time, but what we used to do in the past that made it more complicated was generally we'd have to employ multiple different technologies, which was there were bigger individual projects. So each time you finished one, it wasn't about incrementally building on it. You almost had to start again. It was bigger change for the end users, and that's the fundamental difference. You can, once you get past that first initial sort of build, and we took our time with it to make sure we got it right, and I'll come on to that in a second. It's then sort of very, very simple to sort of incrementally roll out additional value, and they're the things that supported and really drove the business case. But look at some of the things about how we delivered. So again, we go back to the beginning of the story, the nature of the organization, the different areas of the organization, how to bring them together on the same journey, and how to really understand all of the different needs, those different levels of the business. And it was about doing an iterative design and build approach. That's what engaged them all into the process. It made it feel less about a black box. You took the capabilities that came out of the box with the technology, and then you iterated those with the business themselves, being able to sort of look, feel, and touch it. We were a lot more confident then in what we were building and what we were delivering. Therefore, the testing was a lot smoother, and we were a lot more certain of the outcomes. Because we were a multi-phase project, we were able to measure what we were doing, learn from our approaches. Anything that wasn't working as well, we'd change it. We'd update the approach for the next time. We talked quite a lot about the platform. That was fundamental to how we did it. It was one thing to build on, and then we put a lot of time and energy into the data. So it is a big pot of data, very granular. We are getting it from different places, but you get that right and working, then everything else is a lot simpler on top. This for us was the beginning of the journey rather than the end. So the kind of prevailing project attitude is one of yes. So we encouraged new requirements from the business. We encouraged them to think kind of laterally about additional value they could get from the system, the different additional processes that they could include. But then we used our guiding principles to be able to manage the scope and manage the priorities. So we weren't about to change the timeline. We couldn't change the timeline. We had sort of fixed points by which we needed to deliver by, but we wanted to encourage additional value and usage out of the platform and increase the level of adoption. So for that, we wanted to bring in the new stuff, but then we were just really clear about when they would receive the additional functionality. So we're kind of moving towards the end of it. So I thought we'd sort of shift in a bit more of a Q&A style. So I'll start it off with Andy. Mark's going to come and talk for a couple of minutes about OneStream itself, and then we'll open up and we'll start looking at the questions that have come in onto chat as we've been talking. So Andy, my first question to ask is then, so clearly it's quite an ambitious project, very broad scope, federated organisation. Clearly it wasn't all smooth and there were challenges. So what were some of those challenges and what did you do about them?
Yeah, I think the biggest challenge actually was getting accountants to visualize a solution like this. You know, it's all a bit theoretical when you talk about cubes and dimensions, but you know, what does it actually mean for their business, you know? So the approach we took was to take quite an agile approach. So was to build a proof of concept, get some initial requirements, build a proof of concept, so there's something visual, something they could see, and then build on that. So that worked quite well. I think the other challenge was having so many different stakeholders and different you know, areas of the business coming in with different requirements sometimes, and sometimes, you know, changing requirements. That was quite challenging and something that needed quite a lot of project management.
Indeed. And I think if I was to add to it, I think I'd talk about, so we had a fixed timeline, we needed to deliver on certain points, but that doesn't really go hand in hand with, you know, a business that sort of naturally looks and manages at risks and wants to be really, really certain of its outcomes. So I think if we could have built in even more testing than we had and then given ourselves a bit more time to do it, that would have definitely made some of the kind of endpoints a little bit less jarring, a bit smoother, would have been a bit more comfortable delivering it. So the next question is, if you knew then what you know now, what would you have done differently?
What would I have done differently? I think the really important thing, I think, is getting, and this is going to be hard for any organization, I think, is getting people out of their day jobs to focus on a project, you know, and getting the good people, the best people in the teams onto a project is always going to be challenging because the business won't want to lose them. But that's really key for me. And to building that mixed team, you've got the business knowledge, you've got some technical knowledge and some project management. That's one of the keys I think we've discovered.
Yeah, I think if I added to that, I'd say in a way that was one of the things that went really well, and also one of the things we definitely needed to improve. So it was a mixed team. We did have some people out of the business. It just wasn't quite enough. And it would have been, I mean, their lives just would have been simpler themselves. They'd have found their sort of diaries easier to navigate if they kind of been more like 100% backfilled. So I think the more we could have done of that, the better. The bits we did do worked really well, but it was about trying to kind of do that and more. So the knowledge that we needed, and also the knowledge that the business needed going forward, that's where you needed to sort of pluck it out of the business, wrap the project around it, and then allow it to go back in and sort of be advocates of the technology and the process, and help really embed it. So, I mean, one of the things that was really important during the selection process and choosing the right technology was about picking a platform that was extensible, that you could do more with, that could grow with you. So Hyperion is changing rapidly as an organisation. You knew what you wanted to do at the beginning in terms of delivery and phases, what was important, but clearly there was a sort of a longer term plan. So what's next?
So I think what's going to be really interesting the next phase. So we've got monthly reporting, we've got budgeting, which is an annual process. For me, the next phase is how do we make this more operational? How do we get down to more of an operational level of finance data? You know, so we're talking things like registers of employees. How can we track some of our renewals and some of our revenue streams more at a business level? how can we track things like acquisitions? There's a lot of data that we hold on the acquisitions, the revaluing of those, and the share options, etc., that come along with those. How do we track this on a monthly basis, so we can give people that sort of really granular actuals versus budget reporting, and also create rolling forecasts? And then how do we overlay this rolling forecast with budget events? So you've done an annual budget, but then how do you overlay that with subsequent events, either global events like COVID or local events, so that you create something which is much more real time and much more useful on a monthly basis for the business to plan. So that's the next challenge.
Okay. And before we move into kind of Mark's section plus the main Q&A, so there's one more I was going to ask, and I'll give mine, give you a chance to think about yours. But if you could name your highlights on the project. So I've got two. So my first sort of more work one was what I really enjoyed, or I thought was really good. There was the right level of ambition, and there was the right level of engagement from the business. So yes, it was federated. Yes, there was time and energy that had to be put in stakeholder management, but there was a desire to change and a willingness to change and be part of it from the beginning. So it didn't matter that there was lots of different groups of stakeholders with different requirements to manage, because actually they were all really enthusiastic about what they were trying to do, and that made the change easier to put in. My sort of less work one is, I really liked when Hyperion moved into the new office with underground parking, which meant my bike didn't get stolen, which happens quite a lot in London. The showers were really good, and I loved the fact that the cafe upstairs, with an awesome view over the city, just played 80s music all day, every day, and somehow that just always seemed to lighten the mood, even when it was difficult.
Yeah, no, I think it was, it's been a really interesting project, and really high level of engagement from the businesses, which is, I think that's one of the critical sort of success factors, isn't it? Is that level of engagement, the willingness to change. I think that comes with being a sort of fairly young organization, is that we've got that sort of willingness to want to try new things. And a good level of camaraderie on the team, between consultants and in-house people. So really, yeah. No, those are the things that I've enjoyed.
Definitely. Right. So moving on to the last phase of our session. So Mark, I'll hand over to you to give us a few minutes on giving a face to the name of OneStream.
Thanks very much, Ashley. Can you hear me okay?
All good.
Excellent. Okay. So Mark Armstrong here, UK and Ireland Sales Director for OneStream. Very pleased to be able to present to you today, and thank you very much, Ashley and Andy, for your presentation, your excellent presentation so far. So let me talk a little bit about the platform that Hyperion Insurance chose that allowed them to retain that flexibility for the federated businesses, but maintain that corporate governance and control. So I'm not going to go obviously into huge amounts of detail here. I'm just going to spend literally a couple of minutes on this. But what you're looking at on the screen here is OneStream. It is a single product. When you go to our app store and you download it, it is a single file to download. And it contains everything that you're looking at on the screen, with the exception of this center circle, which I'm going to explain a little bit at the moment. So very importantly, and we've got a question about this actually, data acquisition. So bringing data into your solution is very important, but not only bringing that data in, but how do you bring it in and ensure that you have a full audit trail of how that data was loaded and how that data from your potentially multiple source systems was mapped to, let's say in this case, the corporate chart of accounts. And also, if we want more levels of detail, how can we then drill back to those source systems to surface that lower level of detail to aid with analytics? So all of that is included within the OneStream platform. Now, you heard Andy and Ash talk about financial consolidation and reporting, and that's really where we started as an organisation going back 11 years. It is the most complex and most difficult thing to solve within the performance management space, if you will, for large organisations. So everything that you are used to from a financial close and consolidation solution is included within OneStream. So everything to do with intercompany, currency, complex ownership, consolidations, journal posting, etc., is all there within the solution. But also importantly, everything that you need from a planning, budgeting and forecasting perspective. So from a driver-based, from zero-based, activity-based, budgeting, forecasting, allocations, etc., all included within the solution. But this is all, as Andy has said, within a single database. But what we can do within that, within the solution, if you will, is if we can vary the dimensionality to allow Peru to have, or I think it was Colombia, Andy, you said, have its own level of chart of accounts rolling up to the group chart, or perhaps Colombia or Peru having a more detailed forecasting set of chart of accounts that still roll up to that corporate chart, still maintaining that corporate governance. And then, of course, there's a very important piece. We need to analyze this information, whether that's pixel perfect reporting, whether that's ad hoc analysis, dragging and dropping dimensions to see exactly, the view of the data that you need. Or if you're looking for dashboards, very powerful visual consumption of information and data, all of which are drillable, all of which allow you to drill down through the separate solutions that you have, in this case, financial close, planning, budgeting, forecasting, and even drill back down to those source systems that you have within your organization. And then when we got to the point of having a platform, we said, well, there are a lot of things that organizations want to build within OneStream that, a lot of them don't belong in the platform itself. They are solutions in their own right. So what we've done is we've created something called our marketplace, which you can think of as, the Apple App Store or the Android App Store, and hence the mobile phone on the screen there. And we've created, I think at last count, it's 56 solutions in that marketplace. And they vary in terms of what those solutions deliver. But the solutions that you're looking at on the screen are fully enabled, fully working solutions that you can download, bring into your OneStream application, and then start to configure for your own needs. So things like balance sheet reconciliation and attestation, account recs, tax provisioning, people planning, cash planning, sales planning, all sorts of solutions in there that are all available from the marketplace free of charge to our customers. So that's all I really wanted to say on the platform now, just to give you a flavour for what it's designed to do. What we'll do now is we'll move on to a few questions, and I've got a few here that we'll attempt to answer. In the meantime, as you can see on the screen there, we have our contact details. If you wish to contact any of us post this event and ask further questions, please feel free to do so.